Hello, Oak Bloke here, and this is going to cover Cadence Minerals. So this is an article that hasn't been released yet, will be released in the next day or so. Uh, and this is on Cadence Minerals, ticker KDNC. And none of this is investment advice. You make your own investment decisions. So I've created this article, which is I might have to do a Cadence. Um, that um, and you wouldn't want to see that, I can assure you. It's not a pretty sight. But yeah, look, these guys have announced a couple of things, and I just thought I'd talk about their news. So there was terms to restart the Azteca plant. So it's this news by here. Um, so just remove that. There we go. So yeah, anyway, this article kind of covers this idea and covers, this is one of the Oak Bloke 25 for 25. So this imagines an imaginary kernel who has to do a double take because the offtake deal has been proposed but not finalized. So they've kind of agreed the terms in principle, but they've not finalized the terms. So anyway, but I thought watching the video and reading the RNS, like the terms were a little bit opaque. So let's see if we can um, make them a bit more understandable. Anyway, the deal is that these guys have got a huge iron ore mine. So they make green steel or potentially iron ore that can be used to make green steel. They don't make green steel, just to be clear. But it's the type of iron ore, high purity iron ore, that can be used in electric arc furnaces that can be used to make green steel. So it carries a premium. It's a mine that was shut down 12 years ago, I think it is, that is in the process of restarting or recommissioning, and there's a chunk of money that would be needed to restart it, and we're talking several $100 million. Cadence own a proportion of it, and as a stepping stone to get to a definitive feasibility study and to get the decision to restart, to spend the capex to refurb the mine, that there's a tailings dam that they can exploit the resources of, that they can spend a much smaller amount rather than hundreds of millions. They can spend a few million that would give them the ability to reopen a smaller facility that would allow them to take not as good a resource as the main Amapa mine, but it's a smaller resource called Azteca, and the shares shot up to 3.2p on the news and has settled back to kind of 2.2, 2.4 this evening, 2.4, 2.5. So it's I suppose the question is, where will it go? Where will it go next? So it was interesting because it shot up to a point where, compared to my original price, where I included it in the OB 2525, that it was at a profit. So I could have jettisoned at that point and said, oh, calling time. And I chose not to. I thought, yeah, tempted, but no, I'm going to keep going with this. And this was the reason why. So it is true to say that they've obviously been very short of money. They've diluted. So dilution is about 50% over 2 years. This is the numbers. So if you went back 2 years ago, there was 180 million shares. Today, there's 327 million shares. You can sort of see there's a near 50% dilution. The share price has dropped from 7p to 2p, 2.2p. They had holdings like EMH, which is European Metal Holdings PLC, that they've sold off to fund the mine. So they've sold off that. This one has this is Australian Evergreen, so this one has just dropped in price in response to lithium dropping in price. They've participated in something called Pompeius Azidas, which is in Spain, which is of no actual monetary value, but is a early stage tungsten, gold, copper gold project. Sonora is in Mexico and is on hold. The Mexican government have expropriated the license and the land, and there's an arbitration case to seek damages. So the main asset here is Amapa, and you can probably see, the the value. So this value here in millions is how much, comparing the share price. So 3.58 million, 180,000 is the value of this, which means that basically that adds to the difference. That adds to the difference, and that adds to the difference. So the share has moved from 32% to 35%. So as Cadence have spent more money, they've taken, or they now have earned a larger share, and the theoretical net present value of this mine, Amapa mine, has gone from about $1 billion to $2 billion, and quite recently they spoke of a 500 million life of mine benefit. So we'll talk a bit about that. So you can sort of see, based upon these numbers, the value per Cadence share. So this number here is based upon these 327 million. So even with dilution, you can see that per Cadence share, that this is worth £4.45, which is what, 200 times the share price. 2.2p to £4.40 is about a 200 bagger, if they can capture the full benefit, which of course they can't. There'll be further dilution and different things. But anyway, let's get into the what this news is. So are we at the turning of the tide? So a yeah, so this sort of talks about the 500 million life of mine benefit. So you can sort of see the difference of costs were that it would take this, reduce this cost here by about 20%, and by doing so, that would increase the EBITDA profit by about 10%. So the 10% change to the EBIT equates to about a 200 million uplift. So even though it's a 500 million life of mine benefit, because the NPV is the discounted rate, that this kind of translates. I mean, goes from being a 5 billion EBIT to a 5.56 billion EBIT. So it's kind of a 10%, even though it's 500 million, it's 10%, and that, but it is substantial. I mean, it reduces the mining cost by so obviously makes it a more attractive proposition, I guess you could say. So you can see, there was a spike with the news, and it's dropped back, and there's, if you go and look at comments on bulletin boards, there's sort of comments about people feeding their lifestyles and things like this. And it's quite interesting, because if you actually go and look at, well, how much are these people earning? Well, they're not earning mega bucks. I mean, it's and in fact, there's a 50k salary decrease year on year. So they're not yeah. I mean, you could make the argument that they're doing it for the money, and it's just all, it's very convenient when people say, "Oh, it's all a scam." I guess you've got to sort of just weigh that up against, well, hang on, they've taken uh, an iron ore mine that from kind of, something that's festering away in the jungle, through to kind of a near definitive feasibility study. They've got the PFS. They've managed to do the PFS. They've increased the value from 1 billion to 3.2. I mean, that's got to be worth something. That's got to be worth something. So yeah, look, I think it's too easy to just be dismissive of things, but things like and I suppose the most recent RNS was quite confusing. So they talk about an IRR of 70% and a free cash flow of 32 billion. Um, and 380,000 tons of iron ore annual production. So it's all sort of this was all sort of a bit confusing. So let's try and make some sense of it. So the so the revenue per ton at today's prices would be about 120. The operating cost would be about 79. There's a $41 operating profit per ton of iron ore. If you take that number, multiply it by the the estimate that I've used is 960 960,000 over 3 years. Actually, we'll come on to that in a minute. This annual margin is based around the 380 number. So this 380,000 tons, 380 kilotons. Would it, times 380,000 times 41 is 15.72 gross profit or operating profit per annum. And if they've got a 12.5%, so they said we're either going to take a 10 or 15% share, a 12.5% would be worth $2 million per year to Cadence, and $2 million a year. I mean, as you can sort of see, this is costing about $500,000. Like the whole thing's costing about 1 million. So 2 million would sort of keep the lights on, would give a little bit of spare money, but not very much. It's enough to keep the thing going. But this $2 million is not the whole story. It's not the whole story. So what you'll see, and in this chart, I take the 70% IRR to work out, well, based upon a 70% IRR, okay, what is the cash flow that equates to that? Now, what I've done is I've said year zero, there's no production. So at the start, there is no production, which is true. Now, you might disagree with this, but what I've done is I've said in year one, production will only be half. They'll only achieve half of this 380,000 in year one. And I'm just assuming that there's a ramp up phase and commissioning and different things that take time, because that's just normally what does take time in mining. You don't kind of flip a switch and start producing at 100% speed. You kind of get there slowly, catchy monkey. So if that's true, and if it's half in year one, then a 70% IRR would mean that the cash flow in year one, so the physical cash flow is 352, but the net present value of that cash 1 year after is only 207. In year two, they produce double, more or less, well, nearly double, not quite double, but nearly double. The cash flow increases. So that's the cash flow, the Cadence. And then that is the net present value discounted at 70%. And then that discounted again is that. And that's what will get you. So that, so that plus that minus that is equal to zero. That's how you do an IRR calculation, is that you work out how do you end up at zero? Yeah. What discount rate do you need to end up at zero? Now, obviously 70% is very, very aggressive. Okay. Very aggressive, but that's an indication of good value, is that you can, even at a 70% discount, pay for this 575. Now, obviously, they've got to find the 575, but they have done a fundraise fairly recently, so they, I think, have that money, and that money would, as you can see here, if they can get if they can get the full 380 in year one, then obviously they'd have 670,000. And if they participate at 15%, not 12.5, then that number is more like $800,000. So it's as I say, it's enough to keep the lights on, not much more, not much more. But that's just the share that will go to Cadence. So the other part to this is that obviously that's a 12.5, I mean, maybe 15%. But the overall profit, is 15 million per annum. So what happens to the rest of it? So you can sort of see I've worked it out here. So the margin on so I'm assuming 960, which is 200 plus 380 plus 380. Again, if you sort of said, well, no, I'm just going to assume 380 from the get-go, then obviously that margin would be 1140, which would be about 15% more than that. So it'd be about 46 million margin. So taking the share, the 4.92 off, that sort of leaves you with 34. Now they talk about 32 million for equity holders, so there's a sort of 2.44 million discrepancy there. So that discrepancy could be some sort of fee, could be that their numbers are lower than this, that they're looking at making not 960, but maybe 930, something like that. This off-taker fee, obviously this is a discrepancy to the 32 million that they quote. But if you sort of run the numbers based upon that 960, you get that margin and get to there. Now, of that 32 million to equity holders, remember, Cadence is one of those equity holders. That provides pro rata at 35.7% share, 11.44 million towards the cost of Amapa. So that 11.4 million, if you think that the existing 35.7% came from I think it's about 15.5 million that they've contributed. So, and I kind of say, the bit where the bit between the repayment of the loan and the offtake, so there's a sort of 3.8 million. Where's that missing 3.8 million? Well, that 3.8 million kind of tallies very, very closely to what the off-taker has lent in the first place. So in other words, is that 3.8 million not repayment to the off-taker? It's almost certainly is. And there's this 2.44, so maybe that goes to the off-taker as well. So they get 6.2 million. So they're getting sort of, an extra 15%, an arrangement fee or something like that. Kind of, it's going to be something along these lines. So this 3.8 million is the difference between that number there, 4.9, and that number there, 1.1. And I get to this number by, as I say, by working out the NPV at 70%, means the cash flow must be these numbers. But this 1.1 million to Cadence obviously is much lower than the 4.92. So the difference between the 4.92 and the 1.1, okay, or 1.11, is this 3.8 million, which is the money that goes back to the off-taker. So essentially, the off-taker gets paid back for the loan that they make to get Azteca going. So obviously, what that then means is, because the repayments have happened, Azteca is then owned by, well, either Cadence 100% or Cadence 35.7%. I haven't really thought about that until just now, but obviously, the other thing that's said is that this is based upon 960 kilotons, or possibly 1.14 kiloton, 1,140 kilotons, 1.14 megatons. But Kieran, the CEO, also talks about there potentially being 4 megatons, so 4 million tons of resource. He said they're being conservative. Well, in these numbers here, this 4.92 of that 3.8 goes back to the off taker. That only happens once. So if there is actually 4 million there, that number, that there's kind of 3 more of that number there, so that's 15 million that goes directly to Cadence, $15 million. Now bear in mind, folks, that this is a $10 million company, so it's going to get 1.5 times its market price if there's 4 million tons that it can process of 55% iron ore at the current $120 price. And there are a couple of ifs in all of that, but that is nowhere in the price. That is nowhere in the price. But more than that, obviously this number, the number to equity holders, quadruples as well. So it goes from 32 million to 148 million. No, sorry, start again. 128 million. Now, 128 million, it's not quite 50% of the cost of restoring. It's not quite the cost of restoring Amapa. The capital cost, I think it's up here somewhere. The capital cost is, I think it's 307 million. 307 million. But I would make the point. Sorry, I've just lost myself a little bit here. I would make the point that 128 million. Oh, there, I've got the numbers here. So the capex is $377 million, which would be 300 million pounds. So if they have got 4 times, then that would be a further $164 million, and that would sort of take you nearly halfway. And if you're halfway to the money that's needed, that kind of then gives you some options. Halfway to Amapa, halfway to the capex for Amapa. Is it that different? And I suppose this is the thought that I then had was, well, if you go and compare this against sovereign metals, okay, bearing in mind sovereign metals has that market cap and Cadence has that market cap, yeah, so quite a big difference of market cap. Okay, now, is sovereign metals further ahead? Well, in some ways, yes, but sovereign metals has a PFS. Cadence has a PFS. Is sovereign metals working towards a DFS? Yes. Is Cadence working towards a DFS? Probably at around the same speed. Yes. Maybe Cadence is a little bit behind sovereign, but not by vast amounts of time. I mean, might be 6 months, 12 months of difference, 12 months maximum. 12 months maximum. There's a big difference to those numbers. And look at this. Amapa has a 1.97 PFS. With that life of mine improvement, you can get that to 2.2 billion. Sovereign has a 2.3 billion NPV versus this, well, 1.97, but arguably 2.2 NPV. Again, not really very much difference between them. And I appreciate this is graphite and rutile. This is green iron ore. But the value of, I mean, it's the minerals in the ground at the end of the day. And, they are very close to one another in value, but, very different in market cap. Very different in market cap. Now, these guys did a sort of test run, like a little bit like an Azteca, They did a test run to prove that they could produce the graphite and the rutile, and they succeeded. These guys are doing it because they need the money. They need to exploit the fact that they can restore the equipment for a cost of 4.5 million. It's done out of necessity rather than proving it. But and of course, these guys have got Rio Tinto. I'm pretty sure it's Rio Tinto involved in inside. So obviously, there's that in the price as well. But nevertheless, there's a very, very big difference here that I think you could sort of look at this and go, well, yeah, Cadence is extremely cheap based upon there being a lot of pessimism, but when you sort of think where they're at and what the Azteca, assuming it goes ahead, because of course it might not, they might not agree terms with the off-taker. I mean, it seems like the off-taker has offered reasonable terms, that it probably involves taking a couple of million of arrangement fees and things like that, but which we're obviously not directly told about, and also that they'll be living on thin gruel with this cash flow for the next 3 years. Might involve taking some pay cuts, might involve a bit of fundraising. That there's compare that number against the million a year to keep Cadence running, so you're short by a few million there. But fundamentally, the prize is very, very high. And as I say, like this, these numbers here. So per £1 million of shares in Cadence, the value of Amapa is 81.37 million. So that there's a vast potential upside here based upon and this this £4.45 would be for the whole thing. For the 35% share, this is kind of where I get the Amapa value per Cadence share at net present value £2.13. Is the the potential of upside, which would be sort of close on 100 bagger. It's got well, I'm not going to say a lot closer. It has got closer through this news. It's not definitive. There's still risks, but I don't know. I kind of look at these numbers. I look at the where it's where it could end up, and I suppose the upside is sufficient that the risk, and even if it's a case of even if it's a case of some further dilution, if you get an 80 bagger instead of a 100 bagger, I mean, well, who cares? Like, it's greedy to think that you're just going to get 100 no matter what. You won't. You might get 50. It gets diluted by 50%. You get 50 instead of 100. Still, even with a lot of dilution, there's still substantial upside. So that's kind of hopefully sort of demystifies it a bit. I don't definitively know that these are the exact numbers, but I do know these numbers fit the story that we're told about 70% IRR, and the margin, and all of the numbers that were given to us are sort of given to us in code. So this sort of decodes them a little bit. So anyway, hope that's useful. This article will appear in my Substack, which is theoakbloke.substack.com, in the next couple of days. So if you read the article and think you might do a K dance as well, then see you on the dance floor. Oak Bloke saying cheerio for now, cheerio.